Hey everyone, welcome to another episode of Trader Babes. My name is Erica and I am here with my amazing co-host Aria. Hey Aria, how are you doing today, babe?
Hi Erica, how's it going? I'm very excited about this episode. It's an issue that a lot of traders go through, and I see that he is very well versed on this topic. He had a hard time throughout the years, so he's going to give us a lot of great points on this subject.
Yeah, absolutely. That's what I was saying. I think that we're going to have a great episode for newer traders tonight. So many people feel like they are the only ones struggling, and it's just not the case. Every pro who's been here has struggled and has fallen. And that is why I'm so excited that Singles and Doubles is here to tell us about his own personal story with failing several times, getting back up, and look where he is now. So I can't wait to get started. You ready to just jump on in?
Yeah, let's go.
All right, let's let him in. Hi, how are you?
Good evening. How's
Hi.
Everybody? Good, good. We're so excited to have you on. Thank you so much for coming and talking to us. Aria and I were discussing your journey a little bit and how so many new traders feel like they're just the only ones failing and it's taking them forever to get it right. And I just love that you're willing to come on and be transparent about your own story and tell us what really made the changes for you. We can't wait to hear it.
Well, thank you for inviting me. I appreciate it. And you're right. It's been a long journey to finally get to a point where, I was able to turn the corner, and I'm happy to share that with anybody in the hopes that it will help them.
Absolutely. And I guess just to start off, we want to talk about a little bit about how you are as a trader. You are mostly a small cap day trader, correct?
That's correct. I'm a big believer that to excel at something, you kind of need to choose one road or another. And for me, that road is day trading versus swing trading. I will swing trade sometimes, but primarily every day when I'm in the market, I'm thinking about day trading and I'm thinking about day trading small caps. It's kind of where I've found my niche. And so that's what I focus on almost 100%.
And a lot of new traders start in small caps. They at least begin there because they don't feel like they have the budget for large caps, which is another reason why I think it would be great, to hear your story on that, since that's what that's what you specialize in. Excuse me. And I know that you said that you learned for many years, making a lot of mistakes before getting it right. Can you tell us a little bit about how you came into trading and some of the mistakes that you encountered?
Sure. I started really being an active trader probably in the fall of 2011, and I was working full time, but I was actively trading. I was trading in the market every day, and I went for, I want to say, 7.5 years back and forth, up, down, no consistency. I never blew an account up, but at the same time, I didn't make much money either. And so I really had to do a lot of, I had to look inside myself and figure out why not, what was the problem? And basically what it came down to was not following my rules. The rules that I use today, I had in place long before I started following them. And I think that, the question I am often asked is, well, why didn't you follow them? And I can only define it by saying ego and FOMO. Those two things really held me back. I didn't want to exit positions that I was in. And so I would bag hold, I would hold too many positions, I would hold too much size, all the mistakes that you can make. And I kept doing it over and over until I finally reached a point where I stopped. And I said, if you've got these rules and you really want to make it and do this, you have to follow them.
The discipline.
Discipline.
Wow, thank you. I really love your story. It reflects completely on my trading story. Probably took 5 years for me to stay positive and in the green zone. And it all came down to the whole mentality, psychology part of it. And so I really would love to hear what you're saying. It's only been recently that I've became consistent in my profits, and I know everything you're going to say is going to be exactly what I've touched upon. So
yeah, I think a lot of people have similar stories. I try to help people, in sharing mine, because I don't like seeing people go through 90 months of mediocrity, which is what I did. But for me, really, what turned the corner was two things. In early 2019, I found Sapphire, I found Ultra Calls and the Sapphire Discord trading room. And that was huge for me because immediately I was surrounded by not good traders, but great traders. And I started learning a lot from these people. And I realized that I had the potential to take trading as far as I wanted it to go, as long as I did the second thing, which was got super disciplined, really rigid with my rules, and followed them. I knew that my rules worked because when I did follow them, albeit for a short amount of time, I was making money. But then I would bend the rules a little, and then I'd bend them a lot. And next thing you know, I was kind of back where I started. And so finding Sapphire and following my rules changed my entire trading career. And for the last 26 months, it's been night and day, literally life-changing.
what is it that changes, makes that click from having a plan, having your rules, and actually following it?
Well, I think it comes down to you just get tired of banging your head against the wall over and over again, expecting a different result, right?
Right.
I mean, for me, I just had to change me. And I knew that if I could just stay consistent and focus and not give in to the temptations to bag hold and to chase and to have the wrong position size and all those things, that I would be okay. That I might not make money every day, but over the course of time, I would make money consistently. And so I just had to do it long enough to see the results. And then once I started seeing the results, I realized I could never go back and be the way I used to be,
I love that.
because I want to make money. This is what I do full time now. And so, in order to do it full time, Aria, I just had to dig deep and make that change once and for all. And I did.
So much of it was mental. It's
Huge.
you knew what you had to do, but it was like you were your own worst enemy.
That's the absolute truth, Erica. I mean, I was in my own way, and I had to quit doing that. And I rarely break a rule now. I mean, once in a while I do, but it is unintentional. And I don't do it very often, and it's made the difference. And so that's why I tweet my rules out every month on Twitter. And what I tell people is, look, you don't have to follow my rules. I don't care. This is what I do. This works for me. But if you're not going to follow my rules, at least have your own and follow those so that you have a chance to succeed consistently. And that's how small accounts get to be big accounts. That's the name of the game.
Absolutely. Right. I mean, that was really well put. Yeah, you don't have to copy what another trader is doing. But you do have to have your own plan and stick to it. And I know that you said that on this episode, you were going to be kind enough to share your own rule book with us. And if we could just kind of go through each one and talk about what it is, explaining, just to clarify each one. And I know that you had it devised into two different parts. Part one, and the first rule is you wrote defense before offense. Know before taking a trade where your exit will be if you are wrong. Could you go into that a little bit with us, and
Certainly.
also tell us how you determine where your exit will be?
Certainly. That's the first rule for me because I think it's the most important. When I set up a trade, when I'm looking at charts and watch lists and I see something that I might want to play, the first question I ask myself is, if I'm wrong buying it here, where's my stop? And so oftentimes, you'll see people post about price target this and it's going to this level. And, to me, whatever. My first question is not that at all. My first question is always, okay, I'm buying this stock at $2.60. What is my stop? And once I've determined my stop, then I ask myself, can I get 2-to-1 or 3-to-1 return on this trade if it works out? And if the answer is yes, I make the trade. If the answer is I might get 1-to-1, then I'm not going to make that trade. That doesn't mean I'm going to get 2-to-1 or 3-to-1. I may end up getting 1-to-1 because I may have to sell it because the chart changes, the volume changes, something changes once I'm in the trade. But I go into every trade thinking about my stop first. And what I've tweeted and what I tell people is, if you ever ask me when I'm in a position, what is my stop, and I can't answer the question, I'm done trading forever. I'm done, because every single time I make a trade, I'm thinking about the stop first. So that's where I say defense before offense, because I'm not worried about the stock from 260 that's going, I'm not going to come out and say, well, it's going to 320 or it's going to 340 or some outrageous price target. I mean, maybe it does. Great. But I'm thinking about, am I going to set my stop at this trade at 251 or am I going to set at 244? And so that's how I approach everything.
With your risk management.
Absolutely. Because that way I don't get in trouble. And I know once I'm in the trade, I don't have to think about it once I'm in the trade. I already know where my stop is, and then I just let the trade work, for better or for worse.
And what do you use to take those price targets? Because personally, I've become very good at doing stop loss and managing loss, but I still struggle knowing, should I take my price target based on the chart, or should I trail my profit stop loss further? How do you use it? What do you think is most beneficial?
Well, that's a great question. I think for me, two things come into play. One is the chart and what I see, and kind of where it's been, and so I look at that. But the other thing that's huge for me, especially with small caps, is I'm a big believer that the 25 cent, 50 cent, 75 cent, and dollar levels are big support and resistance for stocks, whether that's a stock trading at $1 or $3 or $5. Most of the stocks I trade are $5 and under. And so every 25-cent increment, which I refer to as whole numbers, matter. So in the example I gave a second ago, if I'm buying a stock at 360, my max stop loss is not going to be more than 10%, but that would take it down 36 cents from where I'm at. And I don't want to be in the trade if it goes under 350, because what I have found is that if you breach these quarterly levels on, going south, then you often don't recover. And so I'm very likely, even though I could give it 10% and still be within my rules to the downside, I'm probably only going to give it 9%, not 9%, 9 cents, because I don't want to have it fall under 350, because that's an area that shows weakness.
Mm-hmm. And those are commonly referred to, at least that's the word that I use, as psych levels, because a lot of traders are looking at these 25-cent increments, exactly like you said, if it ends in a 0 or if it ends in a 5.
It's huge. It's absolutely huge. I have countless examples where it's come into play. I mean, it comes into play for me every day. Today, for example, I traded Boxell. I bought the stock at 258. I knew if it got to 250, I had to exit. That's only 8 cents. It's nowhere close to a 10% loss. But I knew that psychologically, that was a bad sign for that stock today. And so I tweeted about it, and I said, if it gets to 250, I'm gone. And I was gone, because and it didn't come back. And so it was the right move. But I'm always paying attention to the chart, and I'm always paying attention to the quarterly level to determine where my stop is.
Great job. That's actually most important in penny stocks, I think. There's the other side of the argument that they say it's not as important anymore because there's so many people that know about this whole number thing, but it came out many years ago. But I think for penny stocks, it definitely still is intact.
I would agree. And when I sold Boxell today, I didn't put the stop at 350. I put it at 351 because I didn't want it to slam through 350 and then I get filled at like 345 or 346, which can happen a lot. And so I don't put a stop on a whole number. I'll put it a penny or two above it because if I'm wrong, I'm wrong. And so if that's the case, I'm out. We'll go to the next one. But I don't want to have it gap further lower when there's no bid support under that whole number.
I love that. That's such an important point that you just made. If I'm wrong, I'm wrong. So what? It's all about your strategy. It's all about just understanding that it's like a video game. You just get out of it. It's nothing personal. If you're wrong, you're wrong. You move on.
That's right.
I actually am wondering though, do you scale in and scale out of your positions, or do you just do one entry and one stop, one exit?
If a trade is going well and I'm trying to decide if I'm going to hold it or sell it, usually I decide to meet in the middle and I'll sell half and ride the rest and see what happens. On the downside, if I'm wrong, I'm usually gone because it hasn't worked. I didn't get it right. There's another train coming, down the road soon, down the track, and we'll go to the next one. And so usually if that's the case, I just sell it. I'm just out. So I'll scale on the upside, but on the downside, not usually.
Okay.
And what are the other rules in part 1 of your rule book? Because I hear you have a great rule book. And if you could possibly explain a bit each of them.
Sure. My second rule is not to put more than 10% of my capital in any one position. And I know there's several great traders out there that don't agree with this. And, so that works for them. But this works for me. I do not put more than 10% of my portfolio in any stock, no matter how much I like the stock. It's just a way for me to protect myself in case something negative occurs while I'm in the trade, which usually is intraday because I don't swing very often. And when I do, I swing small. So it's just something that I'm more comfortable with. And so I don't try to slam it when there's something that I like. I mean, I'll push it hard. I've got a fairly good sized portfolio, but I'm not putting in more than 10%. And conversely, or additionally, another rule I have is that I'm not going to hold a day trade that's down more than 10%. So to me, these two things go together. And the way I explain it best is if I have 10% of my capital in one position, which is my maximum I'll put in, and I get it wrong and sell it 10% lower, I've only lost 1% of my portfolio. That's it. I got the trade completely wrong for the maximum amount of size I'm willing to put in, and it only resulted in a 1% loss, which I can overcome very quickly. So I play the long game. I play the numbers game. I know I'm going to have more winning trades than losing trades. So I need my losing trades to be small and not bury me, which is what they used to do for all those years before.
Mm-hmm. And it's all about risking only what you'd be willing to give up, right?
That's correct. I mean, I'm just not going to get beat big. The only way I'm going to get hit hard on a trade is if it halts, if they come out with an offering, a negative PR, something, intraday when I'm in it with high risk versus outside market hours. Aside from that, you're not going to hit me hard. You might get 1%, but you're not going to get 5% or 10 or 20%. And I'm not going to bag hold it. So to me, it's protection that works. And, I live it every single day. And so I know that I can handle those losses if they come, but I don't want to get stuck ruining a week or a month with a couple bad trades that take too much time to overcome. I just go to the next one. It's not, as Aria said, it's not personal. We just move to the next one.
Yeah, emotions will destroy you in trading.
Absolutely.
And what is rule number 3 and 4?
Well, 3 was about not holding a day trade down more than 10%. Now, number 4 is volume before price, which I think is pretty universal. You have to have volume, or something's not going to move. And if it is moving in the direction you want, but you don't have volume, you might be catching a false breakout. It might be a knife in disguise. And so even if I like the chart, I want to see the volume that is increasing. And I want to see some kind of a base forming. I typically am a dip buyer. So when you're buying a dip, I want a couple candles on the 5-minute chart that are showing some stability. It may not show a rise yet, but if it bases with volume, then I know there's some support there and I can feel more comfortable stepping in. But if I start to see a chart moving higher, curling in the right direction, but there's no volume, I simply cannot play it because I don't know if the second I get in, someone's going to pound it down with heavy volume to the downside when there's no support there. So I look for that all the time. Volume precedes price.
Interesting. I love how you keep saying I cannot do it. And that marks a successful trader because you care so much about your trading habits more than whether you're going to get this one trade right or not. And that was my awakening moment where I realized if I'm doing something wrong right now, I'm going to pay. I realized I paid back whatever profit I made on that lucky trade and then more on my future trades. So having the right habits is the most important thing in day trading. And to me, it sounds exactly what you're saying when you say, I cannot do this. I cannot press this button. I can, you're very
disciplined
as far as that goes.
I wish I didn't have to be, but I went so long not being that way and not getting the results that I wanted that now it's so ingrained in me. It's simply the only way that I can trade and make money consistently. And people say to me, do you have a profit goal every day? And I don't have a profit goal. My goal every day is to be green and to follow my rules 100%. Yeah. And I feel like if I do those two things, things are going to be fine. And even on a red day, and today I was red, actually, for the first time in a couple of weeks, I was red, but I didn't break a rule. I didn't do anything outside of what I do when I'm green. It's just that the trades didn't work out. And so that's part of the game, but I did not break a rule. And so I can live with that because I know that I still traded effectively.
That's wonderful. Yeah, true.
And I know that rule number 5 talks about how many positions you take. Can you tell us a little bit about how you came to that number? And also, what would you recommend as far as beginner day traders, how many positions they have open at a time?
Sure. Well, years ago when I was struggling, I was holding a lot of positions at one time. And when I say a lot, it would not be uncommon back then for me to have 12, 15, even 18 positions at once. And it just could not work. I couldn't I couldn't watch them all. I couldn't trade them all effectively. It was simply too many. And also, you think that you're diversifying when you have that many, but really it's counterproductive. It's the opposite. And so you'd have several that would be up, but 1 or 2 would be down big and you're still red. And so what I learned was to whittle that down to where I'm comfortable with 5 to 8. I may have 10. If the market's good, I might have, as many as 10, but typically it's 5 to 8. And if the market's poor, I may have 0 or 1 or 2. So what I would advise for a newer trader is take as few positions as possible so that you can analyze what's going on, so you can learn. You know, you don't have to be in a hurry. Learn about the trade, see what's happening, be able to watch it and track it and take notes and all the things that go into increasing your skill base, and not taking a lot of positions. I don't know successful traders who have a bunch of positions. I know plenty that carry fewer positions and do just fine. And so 5 to 8 is kind of where I'm comfortable.
Would you recommend even less uh, plays for newer traders who haven't been consistent yet?
I would recommend less positions, less trades, because really when you're newer, it's not about necessarily if the trade worked out or didn't. It's about why'd you take the trade? And even before that, why are you thinking about taking the trade? And when the trade is done, what did you learn? If you made money, like why do you think it worked? What did you notice with the chart? What took place with the volume? And if you didn't make money, did you respect your stop? Did you analyze it afterwards? Did you log the trade in a journal? All those things that go into building habits are important. And I think less is more as far as position holding when you're newer, so that you can do that and start to understand start to finish on each trade.
Wonderful. And what is your rule number 6?
Well, my rule number 6 is that if I'm swing trading, I am going to reduce my size before the day is over. Before I go into that swing, I'm going to reduce. This is huge for me personally, because I'm a big believer that, as I think I said earlier, if you want to be great at something, you need to master it. And I know a lot of people are good swing traders and they're good day traders, but it's hard to be great at both. And so most traders have a bias. Most traders have one or the other that they're really, really strong in. And so I will swing trade. It's not my strength, but there are times when I like the setup to swing a stock. But for example, if I'm holding 20,000 shares of a stock during the regular session, I'm not going to hold 20,000 shares of that same stock overnight. I'm going to reduce it. I might hold half that. I might hold a fourth. I might hold 10% of it, so that I can still participate if there's upside. But I'm a big believer that if there's bad things that happen in the market, announcements and all those types of things, they are more likely to happen outside of the regular session than inside of it. And so I want my risks exposure to be during the regular session, and I don't want to be sitting with a lot of open swing trades at full positions overnight or over the weekend. And so I reduce, and if I miss it, if it gaps huge, then I can live with it. But I'll add one other point on this, which I think is important. When I was coming up with these rules, I looked back at, remember I told you that 2 things held me back. One was ego and one was FOMO. So I would hold big swings overnight and lots of positions. And I would almost always, it seems, start the next day red. I went back and looked at a lot of trades, hundreds of trades. And what I found was that there were far more that gapped down than gapped up. And that told me all I needed to know. So what I'm saying is I'm going to miss a few because I'm reducing, but I don't care, because my experience has been that there are a lot more downside things that happen than upside with small caps. Yeah. And so that's the way I'm going to play.
Yeah. Well, what are some of the risks associated with swing trading penny stocks?
Well, I think that any risk with penny stocks, there could be an offering, there could be a delist notice, there could be a negative PR. I've been through. There could be a halt. I've been through all those things in my trading career. Most small cap traders have, but there's a big difference if you're holding a bunch of size versus if you're not, in your ability to overcome it quickly. I had a stock a couple years ago that got halted for more than a year. And before it opened, I mean, you're just sitting there, you can't trade it. Your money is tied up. I remember another stock that was trading comfortably at $1.55. It got halted. And when it opened, it was at 8 cents. Things like that. Maybe it's your experiences that shape your rules. But for me, I'm not comfortable holding size overnight. And those are the reasons why. So I protect myself from that kind of stuff. And as I said before, if I miss a few to the upside, if they gap big, that's fine. I can live with it.
You're right. Spot on. Thank you so much for sharing that. And what is your rule number 7?
Well, 9:30 to 9:50 a.m. Eastern time, which is the opening of the regular market session. You'll see that the rule says try not to trade 9:30 to 9:50. It doesn't say do not trade. So I try not to trade that period when the market first opens, because I just think it's chaos. Things are jumping around. They're all over the place. I want to see a rhythm get established in the market before I step in. And so I wait. Unless something blatantly appears to me where I can't wait, I'll see a huge stock gap down that I know was just someone unloading. I'll step in then. But for the most part, I don't trade it. I just wait. And I'm not alone. There's a lot of traders I know who feel the exact same way. You don't want to step into something and immediately get whipsawed back and forth, before there's a rhythm that's established. So my solution was, okay, we're just not going to trade then. We're just going to wait. So I wait.
Yeah. And so that way you can get a feel of the price action.
Exactly. Because as both of you know, just because things start one way in the market early is not the way they're going. You can see it go down, then rip higher, then slide lower. So maybe 20 minutes is not a long enough indicator. I don't know. But for me, that's a fair amount of time in order to kind of form an opinion on how I'm feeling about what I'm looking at.
Mm-hmm. And like you said, each of the rules are subjective to each individual trader. So, you kind of have to adjust it to see what works for you. But actually part of that rule brought up a question I have for you. When you're watching, different price action, and normally, open is where things are the most volatile. Do you use scanners to alert you of sudden volume changes or block buys or anything like that?
I have settings on my computer that will alert me if certain things occur. It not necessarily a volume scanner, but more a price scanner.
Okay.
Because if something has a huge move, then I want to be able to look at it and kind of see where it goes from there. So that's kind of what I look at. But sometimes, Erica, I'll just get up and leave the room, for the first 20 minutes. I mean, I'll just walk away because I don't want to chase something, so you kind of
have to do whatever you can to keep yourself in check, right?
Yeah. Yes.
Yeah.
Whatever it takes. So I don't like trading that first part of the day. I will trade pre-market sometimes, which is a little bit different, but first 20 minutes of the regular session, no.
Okay, you just sound like me.
Are you that way?
I need a pattern to form. Like
she won't trade until 11.
11 is my favorite
That's
time.
That's their hour.
I'd watch from 10:30. But like I'm so good at like 11 o'clock trading, 11:30. You can get used to your own time frames.
Yeah. Well, I get it completely. I mean, that works for you, and you have that rhythm that gets set in and that habit of doing it. So I totally understand that.
Mm-hmm. And tell us, what are your favorite day trading indicators?
Well, there's 3 things that I really look at: chart, volume, and catalyst. Those 3 things are the key things I look at. I like to use 5-minute candles. I use a 13 EMA. I try to keep it simple. So I don't look at a lot of indicators. I do have a 13 EMA line that's running, on my charts at all times. But I'm looking for a chart that's looking attractive. As I mentioned before, I have to see the volume, and then catalyst is huge. When you're day trading, a lot of times you're going off a catalyst that maybe happens that day or it's happened in the past. A lot of swing traders are waiting on a catalyst to come in the future. And so for me, as a day trader, if something had a strong catalyst, but maybe hasn't moved yet, well, I can check one of the boxes of something I'm looking for because I feel like it's in place. With those three things I'm looking for, what I tell people is, if you don't have the right chart or the right volume or a catalyst, you cannot make that trade. If you only have one of those three things, you cannot make that trade. If you have two, then I'm probably making the trade. And if there's all three in place, I am positively making that trade because those are optimum conditions. So that's what I'm looking for. You take, catalyst can be anything from insider buying. It can be a strong earnings report for the preceding quarter. It could be a report that came out that day that had something positive that happened. It can be a number of things, but certainly that is one of the things that I want to see.
And you mentioned that you like that you trade off of the 5-minute chart, which goes into rule number 8 on your rule book. And it's talking about the dip buy, because I feel like a lot of people want to, quote unquote, buy the dip, but they're like, I bought the dip and then it keeps on dipping. I am so guilty of having done this when I first started. So can you tell us a little bit more about number 8, how you actually know what a dip buy is and where it's good to get in?
Well, sure. I mean, you hope you get it right. As I mentioned before, what I'm looking for is at least 2 green candles on the 5-minute chart, or maybe they're not green, but you can see the chart not
Like
dropping
bullish
anymore, right? It's starting to, it's starting to look like it could level out, and you're starting to see volume there too. So that there's some support that might give you the confidence to take that play. I'm not going to buy a chart where you see straight candles dropping just because, oh, it's dropped from $6 to $5.40. I'm buying it. No, I don't care what the price is. If the chart with those candles isn't showing a bottom potentially, then you got to wait, because there's no basis to make the assumption that the knife has stopped falling. So I'm looking for that. And I don't want to just see one candle. I want to see at least 2. And I don't use 1-minute candles because I don't think they give you enough of a time frame to really judge it. I'd rather use a couple 5-minute candles, and sometimes I'll use 3 and really see if we're starting to get a bounce. And if you miss the bottom of it, so what? If it's starting to move and it's really going to actually move higher, then you'll get plenty of that move when it does.
It's nearly impossible to catch the exact bottom or the exact top in any trade.
Exactly. You're just trying to get a piece of that pie, over and over again, with strategies that make sense for you to step in the first place.
And your last 2 rules, I love them. Rule number 9 and 10, because I feel like literally every single trader should be abiding by these. Can you tell us what those are and explain a little bit for us?
Certainly. Rule number 9 is to trust the chart. And the way I would explain that is, in my case, I'm a technical guy as far as charts. I use charts. I use them often. I use them every day. I use charts on every single trade that I make. And I've made thousands and thousands of trades over the years. So at some point, you have to trust the chart. And so what I mean by that is, it doesn't matter what I think if the chart doesn't confirm that. So, and it's important because emotion can factor into your trading, And you don't want to have that. You want to be able to have something that is history. And a chart is history. A chart is telling you history, look left, right? And you're seeing what's taking place up to the present moment. And you got to trust it. You trust it through experience. You trust it with making buys over and over again to the point where, it becomes instinctive. It doesn't always mean you're going to be correct, obviously, but you have to trust it, because if you don't, then what are you trusting? Just your gut or your instinct? I mean, that can take you a long ways, but in my case, I'm not that good. I got to see it on the chart.
Same here. I'm a true believer of technicals now. It took me many, many years, but nothing matters to me. News doesn't matter to me. What anyone says to me doesn't matter. My chart would tell me the truth. And doesn't matter how much a price is up or down. If I feel like I'm getting it at a discount, it doesn't matter if it's Apple. It doesn't matter if it's a penny stock. Nothing matters to me but charts.
Well, that's a good point, and that brings up a thought that I have, which is when a press release comes out, it's always subject to interpretation, right? Sometimes it's obvious whether it's good news or bad news, but oftentimes, and we've all seen these press releases, is that real news of significance, or is it fluff news, or what is it? And when I see something like that, I won't make the trade immediately. I want to wait and see what all the smart people do. I want to see what happens on the chart with the market reaction to it before I step in. So I think it's important, because you never know what the reaction is going to be. But if you guess wrong, and it's moving quickly because a PR piece just came out, that can be significant. So the chart matters in what it's telling you.
You bring up a really good point that a lot of newer traders get stuck in, and I was here. It had good news. Why is it selling off? What happened? The sell the news event. So it seems like even if it is good news, you need to wait to see what the market is going to, how they're going to react to it, because the stock is really only worth how much they're willing to pay for the news drop, right?
That's right. That's exactly right. And as you know, a lot of times in anticipation of news, stocks will run up, right?
Mm-hmm.
And then everyone sells the news, and that's done. And so, those are situations that occur. And also, as I mentioned before, you'll see something come out and people will say, well, that's good news. They're doing this and they're doing that. Why is this stock dropping? Not something that was expected. I'm talking about something that comes out of the blue from a company, and you read it and you think that was great news, and the stock is dropping, right? And either, we're wrong in what we thought, or the market's wrong in what they thought. And usually I would venture to guess that it's the former, not the latter. And so, I have to pay attention to things like that. And if I'm not really sure, I simply have to wait. And I do.
Yeah, money usually knows a lot more than us retail traders. So
right.
Usually the price of whatever ticker we play is already priced in. So when the news comes out, they just know to take profit at
like
the
the
same
expected
time
news.
Retail goes into buy. Is that correct? Is that what you also?
Yep. And you see it go all different ways all the time. And so I like trading after the news. And that fits my strategy with day trading, because as I said before, when you're swing trading, you'll see people who are waiting on this, or they're waiting on that. They're waiting on all these catalysts to occur that they think will drive the stock higher, either when the news comes out or prior to the news coming out. And that's fine. No problem. I like trading, after the catalyst is there, because I feel like that information is here right now. And if it's something that can move a stock, then I'm jumping in. especially if it's down and it's something that I think is relevant to the upside. It's subject to interpretation. It's subject to speed, because when these releases come out, and you guys have seen it, right?
Mm-hmm.
People are moving fast. Stocks get real active real quickly. So it's sometimes it's prudent to wait if you're not sure.
Yeah, definitely. Patience is key in trading, especially with your emotions, because otherwise you get, like you said, what killed you, the FOMO, uh, and wanting to chase everything that's running. And I feel like that's so dangerous.
Yep, that's how you get in trouble.
Yeah. And another question, actually, a lot of newer traders I see ask, if you're starting and you want to day trade, but you are under PDT, we hear a lot of times people will recommend to you swing trade first. But if you're really wanting to do day trading, but you have that restriction, what recommendation would you give to them to kind of be able to grind through until they make it over PDT?
Well, unless I'm mistaken, you really have two options. One is a cash account, and the other is a margin account. And if you have a cash account, there's no max number of day trades that you can take, but you have to be careful with your cash so that you don't have a good faith violation, right? When you buy something and then sell it and then buy something else and sell it before the first trade settled.
Mm-hmm.
So people need to know the rules with that so they don't have a violation with their broker, but you're not limited on day trades with your cash. If you're on margin, you've got the leverage of that and everything, but you're limited to 3 day trades in a rolling 5-day period, I believe.
Mm-hmm.
So there's pros and cons to each. I've seen people do it both ways. And it's a longer road to build it up. But I think that the biggest benefit during that time is that you learn how to trade. You learn how to have discipline. You have to. And so when I see someone saying, oh, everything's going to change for me when I get PDT relief, I think to myself, maybe, maybe not. It depends if you've got the discipline and the framework in place to become a successful trader. If you don't, then it doesn't matter if you've got 25,000 plus, or if you were trading with 10,000, or 5,000. You're not ready yet, and you're going to be too loose, and you're going to have challenges. And so the single biggest thing to me, regardless of whether someone's in a cash or margin account, is to learn whatever your rules are, establish some criteria and follow it, and just learn and grow. And when you can grow your account, or when you can put more money into your account, so you can build it up, either way or both ways, you'll get where you want to go, and you will benefit because you learned the things you needed to learn when your account was smaller.
Yeah. And no matter what, trading is a long process. There's so much to learn. There is no magic trick that's just going to overnight make it all suddenly appear and we get it all. Oh, finally everything clicks. No, it's like a constant stair climb.
Yeah, we're learning every day. That's the fun part about it.
Mm-hmm.
That's the beauty of it, right? And so absolutely, you're just building layering bricks on a wall, learning your skills over and over again, and then
I like
learning
that. That's a good one.
That's it.
I like that metaphor. Aria, did you have any more questions?
Yeah, I just have a comment. I really wish I would stumble upon a podcast like this when I started, or even
We're the aha moment.
Absolutely. I was so lost. I mean, I was having a lot of fun, but unlike you, I would blow up a lot of accounts. When I first started, the first few years, I was very passionate, and I wanted it to work, but I didn't quite understand all of these pinpoints. And I really hope people do see and hear your rules on this. It's priceless to form those good habits in trading, because even if you make that amount of money that you want. If you keep trading, it's a pretty high likelihood that if you don't know what you're doing, you may lose that money. And sometimes it's not a big deal if if you haven't become successful just yet. It's okay. Money usually forms you to be who you are at the time that you made that money. So if you're not the best version of you at the time that you hit jackpot, uh, you might not have the best version of you for the rest of your life. It's okay. Follow this process. Day trading truly is a journey of self-discovery. So if you do happen to go through that route, when you get that money, you'll be living your best version of you.
Arya's very philosophical.
Well, that's very well said. I think, that's very well said, and it's the absolute truth. And I think that, this is a psychology course, as I say, with a compensation plan attached.
That's on your Twitter.
That is on my Twitter. Psychology course with an unlimited compensation plan attached. You learn a lot about yourself when you trade. No one's standing over your shoulder. You only have you when you're actually in the heat of the moment, deciding to trade something or not trade something. And so you learn about yourself. This trading is about a lot more than just trading.
Oh yeah.
There's so much more that comes into it. It's about life balance and all these other things. And I think that's beautiful. I like that a lot. And that's one of the best parts about being in this business of what we do, in my opinion.
I agree with you. The stock market, first of all, you're gonna get humbled when you come in. Even if you used to be the smartest person in the room, be prepared to be humbled, because it's going to do it. And the stock market doesn't care who you are, what you look like, what you sound like. We all have a chance to get it right if we stay committed and we just keep grinding and always stay focused on bettering ourselves, right?
Absolutely. That is the truth.
Yeah. Any more questions, Arya?
No, this was a wonderful episode. Thank you so
much.
I'm
so excited for your interview.
Thank you both.
For the same journey as you, and I know there's so many people sharing the same journey, and thank you so much for sharing these with us.
Thank you. And if someone's out there listening and they're struggling with their trading, just don't quit. Stay in the game, and focus on what you need to do. This is a long road. You can make it. Do not quit. Just find the holes in the boat and seal them and improve. And you'll get there, hopefully in less time than it took someone like myself.
And that's amazing that you're willing to share your story to help save some people a few more years. And I personally find you inspirational, because a lot of people would have quit. 7 years, a lot of people would have quit, and you kept going and it paid off. You are the epitome of showing if you continue to learn and you continue to not give up, it will pay off eventually.
Thank you. Thank you both.
Thank you so much. Have a good night.
Enjoy your trading tomorrow.
Thank you. You too. See you in Sapphire.
Okay. Bye-bye.
Bye. Did you enjoy it?
Yeah, that was absolutely...
You were glowing. It was wonderful to see, because it's true. How many times have we all, as traders, gotten discouraged and feel like, oh, everyone's out here making money but me. I'm the only idiot here who cannot get it right.
Right.
It sucks.
It sucks. The worst feeling ever, and I've been through the same journey as him, and that's why I always try to save the people who are starting, or 2 years in it, or 3 years in it, because it took me 5 years to be consistent. I just want to limit those years for whoever is in this game. And again, you are paying a tuition to be very good at this, but try to make the best out of it, just like you do at a university. If you pay for a tuition when you're in school. It's best if you learn the material, and if you get the right grades.
Well, you're not going to graduate if you're not listening to your teachers. If you are just going to ignore every lesson you're there for and just try to go in on test taking day, you're just going to have to end up repeating the class. And that's what we do until we really buckle down and fix what we know is wrong. Because the first thing is figuring out what's happening. And then the second big thing is actually changing it. Because we can sit here and say, oh, I know what I'm doing wrong all day long. But until we actually put our plans into action, nothing's going to change. And I think that he touched on that so well.
Exactly. Well said. And that revelation moment for him was about this. What am I doing? I love what I'm doing, but like, I'm not doing it right. And what do I need to change? Just, come true to yourself. Look at yourself in the mirror. If you're really passionate about this, and which I think many are, just
you have to be to stay here. You have to have that passion to stay in it. Yeah. Awesome. Well, that was refreshing. I loved hearing his story, and I hope that the other newer traders can take something and really put it into action.
And I think they sure will.
Good night, Arya. I know it is late. I love you as always for being on late with me and doing these interviews. Mwah, mwah. Until next time, everyone. Bye.
Thanks. Bye.
Want more Trader Babes? Subscribe now and connect with us on social media for exclusive content and access you won't find anywhere else. And we'll see you right here on the next unforgettable episode of Trader Babes.